Hi, good morning. This is Dr. M. Vijay Kumar, Assistant Professor of Commerce, MVS Government Arts and Science College Autonomous, Mahbub Nagar, Telangana State. Now we are going to discuss about the responsibility accounting. It is one of the branch of accounting, responsibility accounting. First, we will think about the responsibility center. A subunit in an organization whose manager is held responsible or accountable for specified financial results. That subunit is known as responsibility center. Responsibility centers. There will be different types of centers. One is cost center, the segment which has control over the incurrence of costs. The segment which has control over the incurrence of cost. Another one, revenue center. Segment is responsible for the revenue of a unit. That is also responsible center. Cost center is also responsible center. Revenue center also responsible center. In the case of cost center, the paint department in an automobile plant. In the case of revenue center, the reservations department of an airline, that is revenue center. Profit center and investment center, these also responsibility centers. If you take the profit center, segment has control over the both cost and revenue. A company owned restaurant in a fast food choice, that is profit center. The segment which has control over both cost and revenues is known as profit center. Another responsibility center, that is investment center. A division of a large corporation is investment center. The segment which has its control over profits and invested in capital, that is called as investment center. Measuring the management of performance. Evaluation tools for each responsibility center. Cost center. The evaluation tools are cost standards. To what extent cost standards are applied. In the case of profit center, contribution income statement used to evaluate the profit center. In the case of investment center, rate of return on invested funds or residual income is a tool to know the responsibility center like investment center. Performance reports. Performance report shows the budgeted and actual amounts and the variances between these amounts. Key financial results appropriate for the type of responsibility center. Performance report shows the budgeted and actual amounts and the variances between these two amounts of key financial results appropriate for the type of responsibility center. Then now we will move to the activity-based responsibility accounting. ABA, activity-based responsibility accounting. Traditional responsibility accounting system tends to focus on the financial performance measures of cost, revenue, and profit for subunits of the organization. But in the case of activity-based costing system, activity-based responsibility accounting system, it associates cost with the activities that drive those costs. In activity-based responsibility accounting, attention is directed not only to the cost incurred, but also to the activity creating the cost. Behavioral effects of responsibility accounting. we can consider the first behavioral effect is information versus blame. Information versus blame. That is the behavioral effect of responsibility accounting. Controllability. Controllability over the people. Motivating desired behavior. Motivating desired behavior. Then segmented reporting. If we move to the segmented reporting, a segment is any part or activity of an organization about which a manager seeks cost, revenue, or profit data. Segmented report. First, we have to think about a segment. Which segment? What is meaning by segment? Segment is any part or activity of an organization about which a manager seeks cost, revenue, or profit data. Operating section of a hospital. Segmented reporting. If we categorize the segmented reporting based on the US example, cell phone division, systems, personnel. Within the system, sales, within the domestic sales, foreign sales. Personnel, domestic sales, foreign sales. Within the domestic sales, sales territories where the key features of segmented reporting. There are three important aspects which should be focused in segmented reporting. One is contribution format. Another is controllable versus uncontrollable expenses. Segmented income statement. These are the three key segmented reporting aspects, key features. If you take the segmented income statement, in three segments, three types of data is given. Sales minus variable cost, contribution margin, traceable fixed cost, segment margin, common cost, net income. This is the type of preparation of segmented income statement. Costs that cannot be controlled by a segment manager are isolated. Customer profitability analysis and activity based costing. Let's think about this. Special credit terms, small order lots, special packaging, great field service, and JIT delivery. We can handle that, but we need to quote a price that reflects the value of these services. That is activity based costing. Total quality management. In total quality management, three aspects will be focused. One is grade of quality, qualitative design, qualitative conformance. Total quality management. Grade, if you think, ranking between the products or services having the same functional usage. Grading is the first essential thing. It requires to certain quality of design. It must be supported by quality of conformance, judged by customers. While quality of design product meets customer expectations for grade level chosen. For quality conformance, degree to which actual products or services meets its design special and is free of manufacturing defectives. That is, free of manufacturing defectives will be the main focus of total quality management. Cost of now traditional perspective of product quality. You can observe in the graph traditional perspective of product quality. Total quality cost, future cost, prevention and appraisal cost. That should be the where the both types of prevention and appraisal cost and failure cost intersect with each other and that point reflects on the total quality cost. That will be the minimum. That should be the minimum. The percentage of defective product should be minimum. It reflects the total quality management. Quality cost reports. By graphically we can represent a graphic quality cost report might look. Thank you.